Okay, fam, I told you Sofi would run to $12 to $13 by the end of the year, and not only has it done that, it's done it sooner than expected, and it's even pushed the boundaries of almost $15. Anthony Noto says it's not a matter of if, it's a matter of when Sofi becomes one of the largest U.S. banks and fintechs in the country. Now is the time to really start looking at Sofi. We're going to talk about everything in this video: the year-over-year growth, the EPS, the guidance, the earnings, everything. Strap in, sit tight. Before we do that, big announcement. My free masterclass retirement webinar tomorrow, Friday, November 22nd, 8 p.m. Eastern Time, 5 p.m. Pacific. I have a huge announcement. Don't miss it. There'll be a Q&A where you guys can ask me questions. Every single student that has ever attended my webinars say they learn more from me in the hour that they spend with me than they do anywhere else. You guys don't want to miss out on that at all. Remember, tomorrow, November 22nd, 8 p.m. Eastern, 5 p.m. Pacific time. Link is in the information box below, and I will see you guys there. Sofi was as low as $6 just 4 months ago. A lot of people were concerned about this stock, and I told everyone it will be okay going forward with the high interest rates, inflation, jobs, post-COVID, student loan forgiveness, and all these issues has kind of weighed down and created a lot of short selling or bearish sentiment on Sofi. However, with the dovish feds cutting rates twice and more rate cuts on the horizon between now and the spring, as well as later on next year, and not to mention Donald Trump winning the election, these are good things for the financial space. In fact, cyclical stocks will be fine. Financial will be even better, and so will small caps. So Sofi is going to do very well based on these much improved situations or economics. PMI data for manufacturing has also stabilized. Jobs added in the jobs market is getting better. Inflation's dropping pretty drastically. And not only that, the feds are dovish. And then when we look at the forecast for Sofi, we also take into account PMI services data, which is forever expanding, it seems, which is also good. And the fact that Sofi also has a banking charter and they're a fintech, they are a very popular choice, especially amongst millennials and younger people. So let's dive into some facts about Sofi, look at some trades we can make, because quite honestly, Sofi is looking like it's gearing up for a $15 to $16 price run between now and January. Anthony Noto is also a very good CEO as he underpromises, over-delivers, with beating the expectations on earnings consistently, 6 earnings in a row. This is very good. We have to look back where the EPS on Sofi earlier this year and late last year, quarter 4 last year, quarter 1 and 2 this year, 1 to 2 cents positive EPS. Now they're up to 5. This is 2 to 3x increase in the EPS. With a 16 billion market cap and a 4 billion trailing 12 month, or just about 4 billion trailing 12 month revenue, this gives Sofi a price to sales of 4. Now, earlier this year, it was closer to 2 or 2.5, but this is because the market cap has increased based on outstanding shares and the stock price going up. Realistically, with a price to sales, anything under 10 is good. Anything under 5 is really, really good. And anything under 2 or 3 is stellar. Under 1 is almost impossible. Wayfair actually has a price to sales that is very low. It's like right around 1, which is pure insanity, but in a good way. Sofi's is great. Over the past month, shares of this company have returned 33.9% compared to the S&P 500 Composite's 0.6% change. During this period, miscellaneous service industry, which Sofi technology falls in, has gained 4%. The key question now is, what could be the stock's future direction? Sofi Technologies is expected to post earnings of 0.4 cents per share for the current quarter, representing a year-over-year change of 100% over the last 30 days. The consensus has changed to plus 21.7%. The consensus earnings estimate of 0.112 for the current fiscal year indicates a year-over-year change of 133.3%. This estimate has changed 19% increase over the last 30 days. So you can see that Sofi is kind of increasing between 13 to 20% over the last month. So that's showing you the direction that Sofi is headed in. For the next fiscal year, the consensus earnings estimate is 29 cents, indicating a change of 141.9% from what Sofi Technologies is expected to report a year ago. Over the past month, the estimate has changed positive 9.5%. While earnings growth is arguably the most superior indicator of a company's financial health, nothing happens as such if a business isn't able to grow its revenues. Like I've been telling you, the most important part. After all, it's nearly impossible for a company to increase its earnings for an extended period without increasing its revenues. So it's important to know a company's potential revenue growth. For SoFi Technologies, the consensus estimate for the current quarter of $672.99 million indicates a year-over-year change of plus 13.3%. For the current and next fiscal years, $2.53 billion and $3 billion estimates indicate a positive 21.9% and positive 18.7% change, respectively. SoFi Technologies reported revenues of $689.45 million in the last reported quarter, representing year-over-year growth change of 29% or 29.9%. An EPS of 0.05 for the same period compares with a negative 0.03 a year ago. Compared to the estimate of $637.32 million, the reported revenues represent a surprise of positive 8.18%. The EPS was a surprise positive 25%. Over the last 4 quarters, SoFi Technologies has surpassed consensus EPS estimates 2 times. The company topped consensus revenue estimates each time over this period. Another thing to look at is that SoFi stock remains attractive as CEO Anthony Noto expects it to eventually be one of the biggest U.S. banks. And I quote, "It's a matter of when, not if," he told investors in the earnings release last month. The fintech firm has increased its revenue by more than 20% over the last 17 quarters straight, despite higher interest rates that weighed on its lending business. And the momentum will likely get stronger only now that the Federal Reserve has started cutting rates and Donald Trump is slated to take office in the coming months. The U.S. Central Bank has lowered its key interest rates by another 25 basis points on November 7th. SoFi looks particularly well positioned as it's seeing rapid growth in members and products. The personal finance company saw a 35% increase in its members and a 31% increase in products in its third quarter. About 20% of Americans are currently looking for new credit card and new savings account as per data from Mintel. That could translate to more business for SoFi Technologies in 2025. SoFi also offers checking accounts and investing solutions, so it's fair to say that it has successfully transformed from a student loan expert to a full-grown financial services company. Such diversity in its business model could help boost its stock price as well. And note that SoFi stock is currently trading to a 1-year forward price to earnings ratio multiple close to 61, which is not that bad. While that isn't cheap by any stretch of the imagination, it isn't too unreasonable either for a company that grew its revenue by 30% on a year-over-year basis in its latest reported quarter. Wall Street expects SoFi Technologies to earn 12 cents a share this year and more than double that to 28 cents in 2025. With expectations of such significant earnings to growth over the last year, this fintech firm shouldn't look all that expensive at the current levels. If all of this seems confusing to you, the price to sales, price to earnings, EPS, all of this analytical data on stocks as well as news, and you're looking to grow your portfolio, get into trading and investing, or maybe you're losing money and you want to retire early and have financial freedom, I would love to help you, fam. I offer a full training course, Discord, and one-on-one coaching so that I can help you achieve your financial goals. And I grew up in a Catholic household. Like I've said many times, my parents are hard on me about helping others. My dad works with the homeless veterans and he's a director of the Northeastern Division, and I help him with homeless veterans. And when I achieved financial freedom just 5 years ago, I told myself that I would set out on my own journey to help people like he does. So if you guys want to achieve financial freedom and you show up committed and ready to learn, I show up committed, ready to teach you guys how to grow your portfolio. As you guys can see all the comments on the screens, I've shown you students that have turned their portfolios from 8,000 to 27,000 in 4 months. Others that have went from 30,000 to 70,000 in as little as 3.5 to 4 months. And on the screen, you can see my portfolio, $15,000 over 5% in 1 month, over $30,000 in 3 months, which is a 15% return. And I don't even trade as actively as I should on my challenge account. And I'm leading by example, showing you the safe, consistent passive income that you guys can achieve. But if you don't believe me, take a listen to what my student Adam has to say about my coaching and training.
So I started with 15,000, right? I am now at $40,000. Okay. And I'm so proud. It feels, amazing to be able to share this, because I know that there's so many people that will do the same, right? You have to just trust Corey and trust what he's teaching and what he's offering, because he means so well.
So you heard what Adam had to say, and this could be you, fam. I would love to help you. You guys can sign up at any time. Investswithcorey.com. Link is in the information box below. I look forward to seeing you when you are ready to change your life. So you can see here, the first week in November, I projected a possibility, a high possibility, that we could see a price target anywhere between 15 and 15.50 on SoFi by the end of the month, and we've already hit high 14s. Now, right now, the bottom is right around 14 right here. It's closer to 14. And then the real bottom in the gap is 13.50. 13 and 13.50 really is the true bottom, but 14 is fairly safe right now. So what I would say is, if you guys are looking to get into SoFi, you want a dollar cost average. So don't buy too many shares at one time, but you want to start adding, because I really truly see SoFi hitting 16 by the end of the year, and by the end of next year could be as high as 30. Remember, I called Palantir at 50 by the end of the year, and they broke 60. I also told you guys that HIMS would run to the mid 20s, and it did. It pulled back, but it started at 10. So we still are sitting at a 2x return on HIMS. And there's other stocks that have said the same thing on as well, not just HIMS or Palantir. I've also said it on SoFi and SoundHound. I told you guys would run when it was 375. It ran to 780, and it's still in the mid 6s. This is another one of those stocks, and I believe that SoFi will eventually become one of the biggest banks or fintechs combined in the country. So what I would do is I would go out 1 week or 2 weeks selling $14 puts. And if you think about this, a 10% return would be really good. 10% would be $140 a month. If we're going to do $24, $25 a week, it's $100 a month, which is about 7%. If we sell the $13.50, this is going to be about 4%. So we can expect 4 to 7%, average being 5 to 6% per month, which is safe and consistent. And if you want to be a little more aggressive and you want these shares, you could sell the $14.50, which is going to generate $200 a month. So it's about 12%. So what you could do is you could sell 2 puts at $14.50, and you could sell 1 put at 14 and 1 at 13.50, and this would kind of give you an average of 7 to 8% per month. And this is very good, safe, and consistent passive income. And if SoFi was to drop to $13 or 13.50, you would accumulate shares, and then you would go down and start selling 12 and 12.50. And if you don't get assigned there, it's free juicy premium. If the stock goes back up, you're now in the green with a lower dollar cost average from the puts that you sold. SoFi, in my opinion, is a very good company to start investing in now, but there's no guarantees that this stock will just keep going up. It's likely we'll get a pullback down into the $12, $13 range, possibly at some point, but I would see realistically that 13 to 13.50 filling the gap is kind of the floor. So you could anticipate a possible 13 to 13.50 pullback between now and February or March, but then going into spring and summer, it primes for another run upwards of maybe $20 or $25 by the end of 2025, signifying pretty close to a 75% return as of right now. And if you sell puts and dollar cost average, you'll more than double your money, because you're going to be getting all of those premiums on top. Like I said, everyone, don't forget free masterclass retirement webinar Friday, November 22nd, which is tomorrow, 8 p.m. Eastern, 5 p.m. Pacific. Huge announcement, and I'll have a Q&A. Make sure you guys are there. Limited spots remain. If you guys want to sign up for coaching and Discord, you can do so. Links in the information box below. I will catch you guys on the next upload. Take care of yourselves.